Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today, we're diving into a report from Hanover Bancorp. And things might get a little bumpy, it is about banks after all. This is an 8K filing, which is basically a company saying, hey, something important happened, and we need to tell everyone right away. This one is dated February 25th, 2025, so it's pretty recent. Think of it as the corporate world's version of breaking news. The date of the report, or earliest event, is also February 25, 2025, so it looks like all this news is happening on the same day. Alright, let's jump into the meat of it. We're looking at item 7.01, which is all about regulation FD disclosure. FD stands for fair disclosure, and it means companies can't give special info to some investors without telling everyone else at the same time. This is to keep things fair and square. In this case, Hanover Bancorp says that on February 25th, their people are going to be yapping to investors using some slides. These slides, which they've stuck in as Exhibit 99.1, have all the info they're sharing. So basically, everyone gets to see the same playbook. Now here's a tiny but important detail. They're furnishing this info, not filing it. What this means is the details in this section aren't necessarily going into the official record for every type of filing. It's like sharing something informally, rather than making it an official statement. Moving on to item 9.01, this section is where they list all the financial statements and exhibits attached to the report. It's like the table of contents for all the extra documents they're including. And here we have it, Exhibit 99.1, which is the investor presentation. This is the slide deck they're using when they talk to investors. So, if you want to know what Hanover Bancorp is telling the big money folks, this is the place to look. Sadly, it's an external link, so you'll have to click it in the real filing. Finally, we get to the signature. Every report has to be signed off by someone who knows what's going on. In this case, it's Lance P. Burke, the Executive Vice President and Chief Financial Officer, also known as the Principal Financial Officer. So he's the guy putting his name on the line saying everything in this report is accurate, at least to the best of his knowledge. Now let's take a look at the investor presentation itself. Okay, after reviewing the investor presentation, here's what I found interesting. Remember, you'd usually click the link I mentioned before to see this yourself. Hanover Bancorp is basically trying to sell investors on why they're a good bet. They're highlighting their strengths and trying to downplay any weaknesses. Let's see if we can find the true story. First, the bank is based in the New York area. That is a massive market and gives them a chance to grow by acquisition and consolidation, which they specifically mention. They are talking about their future. This presentation makes that clear. They want to be seen as forward-thinking. This might be an attempt to boost their stock price and attract investors. It shows that the company is actively planning for its future and is focused on growing strategically through mergers and acquisitions. The overall tone of the presentation is optimistic, but it's crucial to remember that this is a sales pitch. They want to make themselves look as good as possible. It is important to look past the hype and consider the underlying numbers and trends. What are the financials looking like? Well, Hanover is showing off their loan growth, which is obviously a good thing. Loans are assets that bring income from interest, which is the business of a bank. Also, they make mention of their non-performing loans. In a bank, the only thing worse than not giving enough loans is giving too many of them. A non-performing loan is a loan that isn't getting paid back. It is underperforming. If these loans start growing out of hand, the bank is in trouble. It seems Hanover is working hard to avoid that fate. They're also talking about their net interest margin, that is, the difference between what they earn on loans and what they pay on deposits. The higher the margin, the more profitable the bank. However, this number can be deceptive, so you need to look closely at everything. What do I think of Hanover Bancorp after looking at all this data? Okay, so let's break it down. Hanover Bancorp seems to be in a pretty stable position. They're growing, they're profitable, and they're managing their risks reasonably well. They appear to be very focused on growth. That is the main word I'm seeing. However, like any bank, they face risks. The biggest one is probably the economy. If the economy tanks, people will stop paying their loans and Hanover will be in trouble. Interest rates are another concern. If interest rates rise too quickly, it could hurt their net interest margin. I'd say Hanover is a decent investment, but it's not a home run. It's a solid, well-managed bank that's likely to continue to grow at a moderate pace. But there are definitely risks to consider. Thanks for watching, everyone. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more Corporate Decoder. Let me know what company you want me to decode next.